Hey, good morning. Let's go over today's trade plan. So Friday marked a marginal break to a new all-time high, and at this point, heading into the open, the main question is whether that breakout from Friday is now going to stick and whether we're going to get continuation. So off the open, if the market's holding above 64.5 to 67.5, that's really going to be the test. Because if it is holding above the initial support zone, above the micro bull bear, the 64.50 to 67.5 area, then it means that the breakout from Friday is still intact. Whereas if we're seeing clear signs of weakness off the open and the market fails to hold above the 64.5 to 67.5, then it means that even the breakout from Friday is a failed breakout, and then we're right back within the recent balance. So at that point, ES may go down and test Friday's low at 58.25. It could quite easily go down and test the 52 to 54 support and perhaps find some buyers active over there. And from that point on, we'll have to really assess the situation and see just how weak things are in real time. So beyond 52 to 54, we'd have to see some pretty decent downside momentum. But if that's what we're seeing in real time, then it would even open the door for lower prices because of the failed breakout attempt. So right now the question is whether the buying that we saw on Friday is really a legitimate break to a new high. So far, NASDAQ has held up really well in the overnight session. It's held up over 5,000, and as I discussed in the recap video from Friday, NQ holding above 44.90 to 5,000 is a bullish signal as well. And so far, ES has held above the 67.50 as well. So for now, as long as NASDAQ's holding above its key area and ES is holding above 64.5 to 67.5, we know that the buyers are technically still in control, and it could lead to a retest of Friday's high at 75 to 77, and then it could even go and make a new high from there, because the 75.77, even though it marks the all-time high, it's really just the high from Friday. It's not necessarily major resistance because it's just the high that we made on the prior day. And if there is sufficient momentum in the market and NQ continues to make new highs, then there's not really a whole lot of resistance up here beyond 75.77. So at that point, ES will be making new highs as well, and there is no reference point beyond 77. So at that point, it's really just about where the range gets exhausted. Now, the only red flag in the breakout from Friday, aside from it just being kind of a marginal high, is the weakness in the Russell. Now, we don't necessarily need the Russell to catch up to the S&P, but we do need to see some stability come into the Russell. And, so far in the overnight session, it's been a fairly balanced session in TF, but it did actually break below its low from Friday. So that is the red flag, and that could be a problem for the breakout in the S&P. If Russell continues to sell off the open, then it could lead to lower prices in the S&P. Now, keep in mind that a break of 64.5, 67.5 doesn't mean that ES needs to completely liquidate, right? Because at that point, even though it's a failed breakout from Friday, ES is still going to be just kind of trading in a range, trading in a balance. And the main thing weighing on the S&P is the Russell. So if TF actually pulls back and hits its own level of support, which is down near the low 1350s in TF, so somewhere in the area of 1352 to around 1354 is support in the Russell. So if, let's say, the market does break below initial support and TF continues to head lower as well, if the Russell's hitting 1352 to 1354 area and ES also happens to be at support, then buyers can still be active because we would still be trading within a balance, right? A failure from Friday doesn't mark a complete reversal in trend or anything, right? We would still be trading within a range. It just means the market is not ready to break out yet, but it doesn't mean that it has to break down. And that's why today's short-term bias is marked as neutral bullish, right? So the idea is that as long as ES is holding above initial support, 64.5, 67.5, as long as the breakout in NQ is looking okay and Russell finds some buyers and some stability, then we know that the buyers are overall more dominant. The larger time frame bias is bullish as well. But if we fail at initial support, if we continue to see weakness in the Russell and NASDAQ breaks below 4490 to 5000, then we're back into more of a neutral bias where buyers can be active at support and sellers can be active at resistance. So just because the market doesn't hold short term at 64.5, 67.5 doesn't mean that it has to necessarily break down. It could continue to balance and then still a few days later or sometime in the future still break out. So we can't just flip our bias, and that's where reading the market in real time is really going to come into play, because we have to assess the situation in real time and see the level of strength or weakness that we're seeing in real time in the price action, in the other markets, and in the underlying market internals in terms of the advanced decline and the NYC tick. So if we're seeing excess weakness where the AD is extremely negative, perhaps below minus 12 to 1500 on the AD, and if the tick is printing some pretty negative values around minus 800 to minus 1000 and holding below zero, then we know that the market is not necessarily neutral, that it's actually quite bearish now on the day time frame. But if the tick is fairly balanced, the AD is not extremely weak, then we could just continue balancing in a range even if we fail at initial support, and that could lead to just more of a two-sided session where buyers may step in either at Friday's low or at 52.54, and then we balance from that point on. So that's something we'll have to assess in real time. So that's how the market is set up at the moment. How it responds to initial support is going to be a nice market tell, and we are going to have to keep an eye on the other markets as well because of the way the breakout happened. The breakout from Friday was not an extremely strong breakout. It simply made a marginal high. So we don't have that directional alignment or time frame alignment in the underlying markets just yet. So let's see how ES responds to initial support. Let's see if it can hold above 64.5, 67.5, and on the upside 75, 77 is really the only reference point we have. Beyond that, the market would be making new highs, and that's why unless we're seeing clear signs of weakness, we would have to be careful on the short side. But even on the long side, we can't really be overly aggressive simply because of how the other markets are set up and the fact that it wasn't an extremely strong breakout on Friday. So those are our main thoughts. Let's see if the buy side can maintain short-term control, and we'll take it from there.